Wars create uncertainty in markets and economies worldwide, shaking investor confidence and creating fear across global financial systems. Investors face volatility and risk during geopolitical crises, as sudden news and events can cause markets to rise and fall unpredictably. But with the right strategy and mindset, wealth can not only be protected, but also grown even during uncertain times. Understanding how markets behave during wars and crises is the first and most important step toward making smart financial decisions. Oil and gas prices often spike during conflicts in oil-rich regions, creating ripple effects across the entire global economy. Energy costs rise significantly, affecting transportation, manufacturing, and even everyday expenses for ordinary people. Gold and other safe haven assets often see increased demand as investors look for stability and protection during chaos. Stocks and industries like travel, tourism, and global trade may fall due to uncertainty and reduced economic activity. On the other hand, defense companies and essential goods providers often perform better during times of conflict. Diversification is key to protecting your investments and reducing risk during unpredictable global events. Don't panic during market downturns. History shows that markets are cyclical and tend to recover over time. A long-term perspective helps investors avoid emotional decisions that can harm their financial future. Geopolitical events have a strong impact on currencies and exchange rates across the world. Safe currencies like the US dollar and Swiss franc often strengthen during global crises as investors seek stability. Investors should always keep an emergency fund and liquid assets to stay prepared for unexpected financial situations. Budgeting and controlling expenses becomes even more critical during uncertain economic conditions. War-driven inflation affects groceries, fuel, and transportation costs, making daily life more expensive. Smart investors closely watch trends in oil, energy, and commodities to understand market direction. Defensive stocks, such as utilities and healthcare companies, tend to remain more stable during crises. Even in times of crisis, there are always opportunities for long-term financial growth and wealth creation. Fear creates chaos in the market, but smart investors learn to see opportunities where others see risk. While others panic and make emotional decisions, wise investors stay calm and carefully analyze the situation. History quietly reminds us that markets have always recovered and grown stronger after every major crisis. Trying to perfectly time the market is extremely difficult, especially during uncertain periods. Consistency in investing always beats chaos and emotional decision-making in the long run. Small and steady investments over time can help smooth out the effects of market volatility. Tiny financial steps taken today can grow into massive wealth over the years through consistency. War often fuels demand in unexpected industries, creating hidden opportunities for investors. When oil prices rise, energy companies often see increased profits and stronger performance. Innovation and technology continue to grow, even when the world is facing global challenges.
Interference is making it difficult to get a clear
Uncertainty can
picture.
slow down physical markets like real estate, affecting property investments. Inflation silently eats away at the value of your money, acting like an invisible financial enemy. Keeping cash idle for too long can reduce its value due to rising inflation over time. Investing is the most powerful way to fight inflation and grow your wealth consistently. Not all financial losses are permanent. Many recover with time, patience, and smart decisions. Wealth is often built by those who stay invested when others exit the market in fear. In every crisis, discipline and patience separate successful investors from the rest.